Welcome, everybody, to Talk Back, the Tuesday edition, the Montana World Affairs Council on the radio, sponsored in part by the Mustard Seed Asian Cafe at Southgate Mall, Kootenai Creek Village, the maintenance-free active adult community in Stevensville with the best of Western Montana living, Dig It Excavating, where they bring you 30 years of excellence to every job. Call 214-4292. And by Transport Equipment, your headquarters for RV service, maintenance, and repair, fleet to service vehicles as well, at 541-9097. All right, here we are, the Montana World Affairs Council on the radio. Good morning, Mr. King.
Hey, good morning, Peter. Where's your tie?
I've totally,
no slacks?
Totally forgot it.
You did not dress for the occasion.
I did not. I'm so sorry.
We have a bunch of dapper gentlemen in studio, including our favorite Bob Seidenschwartz, a regular guest host
and
here.
If you turn up your radio really loud, you'll be able to see us. Hi, Bob.
I've done that before. It works.
I know. What the heck? Anyway, so tell us about our guests.
We have Danhauser, Kunstfeld, and Seidenschwartz in studio. Merkel has sent us.
Wow. Amazing. And don't forget Kim.
And Kim. And actually, I do want to introduce Dr. Abraham Kim, because this is, yes, it's Montana World Affairs Council on the radio, but this was a Mansfield-sponsored program that brought these two distinguished gentlemen here to Missoula. So I would like to ask Dr. Kim just to, please, if you would, do the introduction and talk a little bit about this program, and then we will introduce our guests, because we had the pleasure of spending some time with them yesterday. And the presentation that they made to the group is both insightful, compelling, and a little bit worrisome. So with that, I'd like to introduce Dr. Abraham Kim from the Mansfield Center. Thank you.
Well, thank you, Bob. We have the distinct honor of having two gentlemen. One, Bob Danhauser. He is the head of capital market policies from the CFA Institute. And we'll have a moment to introduce these gentlemen in more detail. And also his friend, Tyler Creutzfeldt from Mont Vista Capital. And these two gentlemen are here to talk about, really about U.S.-China relations. They're here to talk about how to connect Montana with the financial markets, the global financial markets, and have a better understanding of what's going on around the world, as well as how to get our students and faculty and our community involved in understanding better what's going on around our world in terms of capital markets. So we're so glad they're here, so welcome.
All right, to both of you gentlemen. So should we start with Bob?
Yes, if
Bob?
you would, please.
Bob?
Yes.
Bob? Okay. All right.
Bob, Ray.
Whoops, there we go.
There we go.
There you go. Who's tall? All right, go for it.
Thank you. Good morning. As we mentioned, I'm Bob Danhauser from the wilds of New Jersey, and very happy to be with you here in Missoula. It's a great trip and wonderful reception that we've gotten so far, so I really appreciate being here. And as Abe Kim mentioned, our purpose is really to talk about China and the relationship with the U.S. and the interconnection of financial markets between China and the U.S. And as U.S. investors, what we should be thinking about and worrying about as we look overseas at what's going on in China. So great conversation, and I hope we have some good dialogue today.
Well, let's start the questions with the first big one. Is China going to have an economic collapse in the near future?
Well, what's the near future?
Well,
John gets right to the point, doesn't he, John? Can we lead in a little bit with what his organization is doing in China?
Well, yeah, sure.
Yeah.
Go for it.
Because that will be an important lead into your question. Hate to cut you off at the knees here, John, but
that's okay.
I think I'd like to set the stage. Yeah, set the stage for the audience in terms of what is the significance of your organization in terms of why you are going to China.
Actually, the two are pretty related, because I think what we are doing in China gives us some perspective that might help with that question. So by way of background, the CFA Institute is the world's leading educational organization for professional investors. We confer a designation to people who work in the investment management field called the Chartered Financial Analyst designation. And if you're one of maybe two people in the whole United States who actually bother to read your mutual fund prospectuses, you'll see that the people who are running your money probably have CFA after their names. So it's a fairly rigorous 3-year exam process that typically requires 600 hours of preparation to get through. And we think it gives investors all around the world the tools that they need to manage money effectively. We are a global organization. We started here in the States, but we have a footprint all across the globe, and China is becoming increasingly important and interesting to us. We have about 3,000 members there currently out of a global membership of 125,000. but some 99,000 folks in China who are queuing up to take our exams, which is huge, just a very outsized proportion of people relative to the rest of the world. And I think that says something for where the markets in China are going. It's increasingly a professional market and perhaps a little bit less the retail market that we've seen up till now.
So if they pass their exams, will they outplay the number of CFAs here in the United States?
Eventually, yeah, that's the growth trajectory right now, that the lines are about to cross. We're about to see more candidates, as we call them, into our program coming from China than we see from the United States, which is pretty incredible.
I had heard that it wouldn't be too terribly long before China becomes the number one economy in the world. Now, is that a long way off, or are we closer than we thought, or has the recent downturn in China put a crimp in that?
Well, the official policy in China is to aim for GDP growth of around 6.5% or 7%, which is astounding. I mean, that's a tremendous rate of increase, but it's down from past years where we've been up around 9, 10, or 11%. So to project where we're going to go and whether China is going to continue on that path is why people like the people who go through our program get the big bucks and think long and hard about these kinds of issues. If it was an easy call to make, I guess it wouldn't be so interesting. There's a lot of debate over whether that path is sustainable. So can you really continue to grow an economy that fast, that quickly, as China has done, without suffering some societal effects and just some macroeconomic structural effects that I think the Chinese are dealing with even as we speak today?
So just as a regular person that reads the paper, I've seen two different stories. I've heard one story from a prominent politician telling me about how China crushes us with our bad deals. And I've heard another story about shadow banking and a bubble that's about to burst. Are either of these painting an accurate picture?
You know, in general terms, sure. Like what most politicians talk about, there's a germ of truth in there somewhere that's enhanced by a point that they're trying to make that perhaps is... Yeah, exactly. They're selling a product, and the product happens to be themselves. So as to the first issue, trade deals with anyone, China or elsewhere, and the way countries manage their currencies certainly have a great deal of effect on us. And China's policy up until now has been to emphasize an export-driven economy. And to do that, they try to keep the cost of their exports to the rest of the world fairly cheap. And so there's been a what many would call an artificial overvaluation of the Chinese currency relative to other currencies to make exports more attractive. And, history would teach us that that's probably not a sustainable thing. At some point, the market forces will come into play and cause currencies to become devalued.
All right, we've got to go to a break, and then we'll get back and
when we come back, I want to ask Tyler a question and also have him give some perspective, because we're talking about China as if it's always existed in this economic state. This is a relatively new phenomena. And when we come back, Tyler, please give us a little perspective about that.
We're going to come right back. All three lines open, by the way. If you have a question or a comment, 721-1290. These gentlemen all have headphones, and they'll be happy to listen and respond to your questions and comments. We'll be right back. And we are back on Talkback, the Montana World Affairs Council on the radio here. Joining us in studio, Bob Danhauser and Tyler Creutzfeldt, and, of course, Dr. Abraham Kim and Bob Seidenschwartz and John and whatever my name used to be. I have no idea. All right, so now go ahead, Bob.
So question for Tyler. We're talking about China. If you just landed right now, you would think that China has existed in this state, for decades. But this is a recent phenomenon in terms of the economic growth. Could you please give us some perspective in terms of how hard and fast they've been running and what some of those challenges are right now? Because from my perspective, they're still early in the game in terms of their economic policy and institutional development.
Exactly. Well, first to introduce myself, Tyler Creutzfeldt. I'm a Miles City native. Go Grizz.
Yeah. Hey, boy.
Father's a UM law grad, sister's UM law grad.
I was going to say, you're in the wrong part of the state to be a Grizz
exactly.
fan, but we love you.
And I came from the wilds of Miami to Missoula, and I was in part responsible for getting these folks here. So thank you for everybody for having us.
Thanks.
The Chinese are trying to figure out really how to grow their economy and do it the right way. A friend of mine who used to regulate banks with me in San Francisco, about 13 years ago, she was charged with going over and educating the regulators how to regulate their banks. Mm-hmm. And that's not too long ago.
Right.
So we're seeing a cycle right now where we have a lot of bad assets, problem loans, lack of disclosure, and those are the big picture issues which
So
people
is that like growing pains, basically?
Oh, absolutely, growing pains, and people like Bob and his peers are at the head of the curve at a high level, trying to get ahead of it and add value.
So are mistakes that you have just mentioned, that here in America we would call crimes, okay, in some cases, is that simply a fact of that they just haven't had a chance to learn the correct way to do things? They're just trying to make do, or are there international rules that apply that you just can't do that no matter where you are?
I've learned that there's a cultural component to how China operates, which ultimately is different from the rest of the world and different from how America operates. So as a business person going over there trying to do deals or something, you have to understand that the culture is different around what is acceptable for doing deals.
So give us an example of that. I mean, last night that was one of the questions I was going to ask is, we don't have enough cultural understanding. So please, if you would, share an example of what that would look like.
First of all, my colleague is fluent in Mandarin, and there's how many different dialects of Mandarin. So, number one, you have to be cognizant of where you're at in China, what state you're at, and be respectful of that. Second, is there's a lot of folks who are concerned about the rule of law and contracts or agreements actually being enforced, and that's probably the biggest concern that we would have in doing business with Chinese, that if you sign something, is it enforceable and do they respect it? And that's really a fundamental concern, something you need to run traps around if you're going to do a project or a deal in China.
But let's give the Chinese some credit too. They've come so far, so fast from a completely state-controlled economy to letting market forces in and something that more resembles the rest of the world. To do that in the space of 30 or 40 years is really pretty remarkable, and not too surprising that there's some growing pains along the way.
And worrisome to the government to be able to give up this control. I mean, that is one thing that continually comes out of China, which is, if we're going to give these reforms a chance, how much do we give and rope to lead here? And right now, with corruption and some of the issues that are taking place, they're still really kind of walking this thing along the ladder here.
Indeed. And, if you look at the way they've managed their banks, for example, so the banking sector in China, I think they've taken to heart a lot of the lessons from the Western world in the global financial crisis. You see banks with fairly, some would say onerous capital requirements, building in buffers to absorb the next crisis. Right. That's pretty prudent risk management these days, so looks world standard.
Well, we got to manage our phone lines real quick. We got Justin on the line. Thanks for calling in, Justin.
Hey, guys.
I understand you have a question about CFAs?
I do. So I have a buddy in Santa Fe who got his CFA last year, level 3, and over the years watching him and looking at the materials that you guys provided and such, it was awesome. I mean, it was a phenomenal amount of information. And I am not a professional investor. However, I do manage my own money. And so I went on and thought, I'll go get the class and I'll take this. But then I found out that you have to be attached professionally to a fund or to a managing money professionally. And so then I kind of shot that down. So I was wondering, is there any way for the layperson to garner the knowledge that you guys impart?
Great question, Justin, and thank you. And I'm glad to hear that your friend made it through. It's kind of a tough road to get through all 3 exams, so congratulations to him for doing it. So there's a couple options for you. One is you can consider a mid-career change if it's something that's really interesting to you. You don't need to be part of the industry to take the exams, but to receive the final designation, the Chartered Financial Analyst designation, you do have to have 4 years of qualifying work experience in the industry. If that's not in the cards for you, there's a couple of other options. One is just to browse our website, which is cfainstitute.org, so cfainstitute.org. You'll find a wealth of information that's made freely available to the public there, including some online classes in some topics that are very current in the world of investing. In particular, we're just rolling out a new behavioral finance class that I think is top-notch and really brings a lot of the current thinking to how money should be managed. The other thing perhaps to give some consideration to is something that we call the Claritas Certificate. Claritas is a program that we introduced a few years ago to provide foundational knowledge in investing, covering pretty much the same breadth as the CFA Institute curriculum, but at just a little bit more manageable depth. And requires a little bit less of people, doesn't require 3 years and hundreds of hours to get through. We typically think that most people would spend about 75 to 100 hours to prepare for it. And it's a test you can go and take online pretty much at your convenience. So that might be something to look into, and I hope you'll have a look at the website as well.
So this is a question for both of our guests here. Let's go back to pre-2008 and then 2008 in terms of what happened here in the U.S. We see some parallels right now in China. And you hear the term shadow banking and bad debt and housing bubble and things like that, which are concerning to me. So we've got a break that we have to go to, and I know that's a bit of a question, so when we come back from the break, we'll go to the question and give you time to answer, please.
Okay, stay with us. By the way, all three lines open. If you want to visit with these gentlemen, 721-1290 is our number. This is Talk Back, the Montana World Affairs Council on the radio.
10th caller gets a CFA certificate, right? Like just doling them out.
Wow. We'll be right back after John leaves the room, so we'll be right back. You had just begun to ask a question. We got about 3 minutes, so please go ahead.
All right, and we need to carry this over because it's a big, broad question. I see some parallels with China right now in their markets and their banking systems, and I brought the word shadow banking up, which I'd like to have you explain the meaning of that and parallels to 2008 in terms of what happened here. So if both of you gentlemen would please give your insight.
Sure. Well, real big question. So let's start with what shadow banking is. It sounds kind of negative. A little.
You think so?
If you think about how companies try to finance their growth, they've got a couple of different options here in the United States. They can go to their bank and they can borrow some money. They can go to the bond markets and sell bonds. They can go to the stock market and sell stocks. What happened here in the States with the financial crisis that we had was that there was a lot of loans that were made by banks, primarily around real estate, that got packaged up and sold as securities and distributed through the financial markets. And it turns out that people didn't really understand the risks that were embedded in all those loans and all those derivative securities. And things blew up, and there was a ripple effect through the system that damaged a lot of people. So the shadow banking system here, what they call the securitization market, so taking all those loans and securitizing them into a pool, was one of the reasons for our downfall. In China, it's a little bit different. It's a very credit-driven economy. So if you're a company, you can go to your bank and try to get a loan, but you don't really have those other options. There's not a real mature equity market or a real mature bond market as alternative sources for capital. And because the Chinese regulators have begun pulling back in what they allow banks to do, it's pretty tough for a lot of companies to get the financing that they need. And so what's sprung up are these shadow banking mechanisms by which companies can access other channels to get financing. And these take a couple of different forms. There are these trust companies that are kind of like what the old high-yield bond shops were here in the States. If you remember Michael Milken and Drexel Burnham Lambert, speaking of doesn't sound so good, they're doing essentially the same thing with these trust companies in China, where they're arranging riskier loans to riskier borrowers, but keeping them outside the banking system.
So is a shadow bank doing a service that a normal bank in the United States would probably do, but because it's in the context of China, it can't do it with official government sanction?
Yeah, exactly right. So the China system is pretty tightly controlled around what banks can do. For example, there's a limit that says banks can't loan more than 75% of the total deposits that they have. And the interest rates that they can pay on those deposits are largely determined by government policy. So if you're a bank, you're saying, well, geez, I can only take in so many deposits. I can't bring any others in the door. So that limits the number of loans that I can make. I'm going to try to limit my loans to the most credit-worthy, sort of top-notch borrowers. There's a whole bunch of firms who are not at the very top of that list, who aren't absolutely top-notch, but perhaps still deserving of financing. And so they're finding these other shadow banking channels to access credit. And the real question as we look at China is, what does it mean if things go bad in the shadow banking sector? Are things going to ripple through and take down the banking side? Does it have any effects on the U.S. side as well? I think it's a pretty big question. Perhaps we can explore after the break.
But yeah, we have a hard break right now. We got a timeout, so great into that segment.
All right, so much going on here, folks. And if you have a question, these folks quite literally have their fingers on the pulse of the world economy. So if you have a question, now is the time to call 721-1290. Take advantage of the accumulated knowledge in this room. We're going to come back after our top of the hour break. Speaking of good credit, there you go. All right. Welcome back, everybody. The Montana World Affairs Council on the radio. And let's go right to the phones because Catherine's been waiting all the way through the break. And so let's get her on right now. Hi, Catherine. You're on with our guests. Hi.
Good morning. Good morning. About China. I kind of have a couple questions, and they're sort of tied together, but maybe not really. I don't know. But here we go. Shanghai Exchange lists A shares, which are off limits to non-Chinese investors. The B shares that are listed are usually kind of poor companies, but they are allowed for foreign investors. ADRs from Hong Kong are also allowed, but there's kind of a restriction. I don't know how open they are these days for foreign investing in Chinese companies. And I wanted to also ask you about the fact that capital flight from China has steadily increased for the last year and a half. And a lot of Chinese investors are buying real estate in California, and they're also buying other companies like an iconic hotel chain. I can't remember the name of it. Pardon?
Don't forget the theaters, AMC chain, I believe.
Yeah, AMC.
72 questions
Oh,
right
I'm sorry.
there. Can we?
Yeah.
You have great questions, and I'd like to let Tyler address especially Chinese flight, because this conversation came up last night in their presentation.
Yeah, just
So,
hang on the
Tyler?
phone, Catherine. So go ahead.
First of all, great question. On Chinese direct investment in the U.S., we're seeing a pretty solid upward trend, and that trend is being led by real estate, direct investment, and it's being led by private investors from China, and it's heading towards Missoula. We've seen a $1 billion transaction just literally seven hours from here, and it's a multi-use, mixed-use, 3-4-story development in Bellevue, Washington. And there's been a hotel chain, I think it's called Red Lion, that has been acquired by a family. So real estate is leading the way, entertainment. But as we look towards Montana and some of our core industries, we have natural resources, which Chinese also want and need, and a lot of innovation. We do great work in innovating companies, and there's an interest in that too. So there's a lot of interest. We need to figure out what to do with it. Organizations like Mansfield and University of Montana can be hugely instrumental in that. So quite encouraging.
So, Tyler, I want to ask you, and also Robert, please weigh in on this. The question we should be asking is, if this money is coming here, just like you live in Miami, Miami's been an epicenter for decades in terms of flight of capital coming out of Latin America. So now we on the West Coast are seeing this happening in China. There's a reason this is happening, and it's not just about solely the investment opportunities.
There's a flight to risk, or flight to safety, and real estate is known to Chinese investors, and that's why you're seeing quite a bit of interest from investors in real estate. One gentleman last night at our dinner indicated that he closed on a transaction of a single-family home in Missoula, $350,000 for all cash in the last month or two. So it's coming, folks, and it's not such a bad thing. There's a lot of...
I was going to ask you about that because there is, Catherine, we'll get you on in a second.
Okay.
There is a fear from some who may be a little bit more nationalistic, thinking, gosh, all this money coming in from China can't be a good thing. Well, can't it be construed as either a good thing or a bad thing, or is good or bad have anything to do with it?
It's a great question, and it gets to sort of the politics of the day, I think. At the end of the day, the capital markets are supposed to channel capital to their most deserving use and their most productive use. And so the political overlay that goes on top of that addresses other priorities and other concerns. And here in the States, we have a process that provides for overview of sensitive industries where foreign control might not be desirable for national defense reasons or other sort of national interest issues. But a hotel chain or a movie theater chain or other ventures where capital is needed, it really shouldn't matter to us too much whether it's French capital or Chinese capital or U.S. capital.
Okay, go ahead, Catherine, go ahead.
Yeah, I was just going to say, though, that the U.S. companies are barred from buying Chinese companies, are they not? So they cannot, in turn, go over and say Halliburton or IBM go over and buy Mosaic, for example, or make an offer on it. But yet Chinese companies can and do make offers and buy American some of them iconic, U.S. companies. And so that, to me, does not indicate free trade or fair trade, does it?
Excellent point, Catherine, and it gets to your original question about the restrictions on investing in China. I think, as you alluded to, you're seeing some relaxation of those past restrictions. So there's now programs allowing for a certain amount of investment through qualified investors directly into the China markets. Frankly, the equity market needs to be further developed, and the bond market has quite a ways to go in China before it will attract the institutional interest of non-Chinese investors. But that path is being sown, and I think you'll see not a completely free exchange of capital back and forth, but a freer exchange of capital relative to where we've been in the last 5 or 10 years. To your point about whether there's risk for sort of allowing a one-sided transaction where Chinese capital can flow in and take control of American properties and not allow us the same privilege back in China. Again, I think you have to think about the efficiencies of allowing free flow of capital. Ultimately, we should benefit from access to lower cost capital and more availability of capital if we're free and open to global capital flows. And the Chinese industries will suffer by not having that same access.
Hey, Catherine, we got to let you go.
Thanks.
Thanks for the call. We're up against a break. Go ahead, Bob. You wanted to
I was just going to say a reminder of a story about when the Japanese were buying American properties some decades ago. Happy to sell you the properties at inflated values, and when the market crashed, I bought them back from you on pennies on the dollar. You can't move Pebble Beach over to Japan or Rockefeller Center over to Japan. So to your point about capital flows, it's still a market that will put valuations to what that may be.
We're going to come right back. 721-1290 is our number. Marilyn is waiting to visit with you. We have 2 lines open, and Montana World Affairs Council on the radio continues in a moment. Okay, we are back. Talk Back continues. The Montana World Affairs Council on the radio. Our distinguished guests, unfortunately, have to be leaving in just a few minutes, so let's get Marilyn's call on. Marilyn, what's your question for our guests?
Okay, I've got several here. We've been hearing Candidate A talk about a 45% tariff. I'm not sure if these folks would have any... I would like to know, have somebody explain what that would do to our economy. And as you talk about the investments here in the U.S., would China be thinking about buying our coal plants over in Colstrip? And another thing, when they do invest here, like you talked about the AMC and the Red Lion, is that state money or is that individual money?
Okay, thanks, Marilyn. Marilyn had several questions, so who wants to jump in first? Tyler?
I'll take the question first. AMC and Red Lion's private money. And in terms of developing investment opportunities between U.S. and China, I think there's a big opportunity for investors, business people alike, to think about creating trusted relationships with private individuals and private families from China. And the history of Mansfield in particular, Mike Mansfield, lends itself to that positive outcome. In terms of impact on the tariff, there's going to be a short-term impact, but you got to realize that the amount of capital that's coming directly from China into the U.S. is fairly limited. We saw $15 billion in 2014. I think the number is going to be $30 billion in 2015. It's obviously a big jump, but in total terms, it's still a drop in the bucket in terms of capital investment. Regarding Colstrip, briefly, the plant itself may have Chinese interest, but the resource itself, coal in the ground, that's one scenario where you're going to have federal government feedback, state feedback on what happens with it.
Well, the problem with coal is even if China or Russia or anybody else wants coal, have to have a way to get it there. And now with all the roadblocks that are going up on the West Coast, at various Oregon and Washington, groups saying we don't want to have that port here for the coal coming through or the oil or whatever it is, getting it to where it's been purchased from makes it more difficult.
We've been tracking it closely, and the coal that is wanting to be exported out of the West Coast, we're seeing a strategy called the Thin Green Line, And it's been one of the most effective environmental advocacy strategies that we've seen, led by environmental community, but also the communities out on the coast. So the Chinese want our coal. They want us. They want to get it. They want it at the port. They want to export it. But I'll tell you a brief story. One of the largest coal traders from the U.S. took his family over to Shanghai 3 years ago. First time he'd been there. He said, "Tyler, I'm not going to go back because the air quality was so terrible." This was a privately held U.S. company. So the thin green line that we've executed on the West Coast, there's probably some valid reasons why we're not exporting coal.
Give us some indication of what the mix in China of energy usage is right now, and what are they doing? They know they got a problem. So what's happening internally within the country?
So I'll just go back to coal. The policies that the Chinese government have made around the fuels that they use, those decisions have been made, and the capitalists have responded. Now they're determining that coal in their energy mix probably has a sunset. So we're seeing a general negative response towards more coal. We're seeing more interest in addressing carbon emissions and pollution in numerous factors, not only carbon. So it's positive for American clean tech investors and entrepreneurs. We just got to figure out how to do business in China. And that, if I were to say one thing, we have to have patience. These relationships take a long, long time. We're talking years. It's not like you can walk into your local Elks Club down on the street and shake a hand and do a contract.
I will tell you what I just read this morning of things that are happening in coal communities across this country. People that have been in that industry since they were graduated from high school, went all the way through. Now they're 40 and 50. They're losing their jobs. Coal mines shutting down. People are turning to suicide, and it has alarmingly increased throughout the country wherever there are these extractive industries that are shutting down. And I realize that is an unfortunate byproduct of what's going on in the world right now. But it to me, it's terribly alarming that people think the only way they don't see any hope in our politicians coming up with a way to increase the output of our economy in different ways. So they take matters into their own hands, quite literally. So I mean, I know as capital, venture capitalists, I'd realize that's something you probably can't think about too much. But does that ever enter into what you're thinking?
The markets have realized that shifting a lot of these environmental costs off to the public is not going to work over the long term. And so increasingly you're seeing factoring of so-called ESG factors, so environmental, social, and governance factors into investment decisions and deciding where to allocate capital and not. And a great example, frankly, is in China, where I mentioned before the bond markets are really poorly developed, mostly government bonds and not much private bond issuance. But in the last year or two, there have been issuance of so-called green bonds. So bonds that are intended to either remedy an existing environmental issue or fund clean tech ventures by going through and setting up a formal bond, which I think is promising on both levels, both from the standpoint of financing a more progressive view of environmental costs and not having those borne by the state necessarily and taxpayers, as well as creating a bit more sophisticated and deeper bond market for investors.
One comment on coal. It's really about political leadership. The governors of Montana, Wyoming, West Virginia, there's been a little bit of a hesitancy to tackle the carbon thing. And if you're looking at that industry as a core driver of jobs, you'd think you'd devote some resources towards addressing this carbon thing.
Yeah.
And I'm gonna pick on Wyoming, although I'm a moderate Republican. That state has suffered from a lack of investment and attention towards this carbon thing. And we're now trying to play catch up and see if we can solve that problem.
So, Tyler, you mentioned coal. I look at as an example, the IEA, International Energy Agency. You look at the energy mix over the next, say, 20, 30 years, coal still has a very significant portion of that energy pie. And to the point that Robert's making in terms of the regulatory and adherence to some governorship, how critical is that combination of being able to provide that so that the markets have opportunities to issue bonds, which is exactly what you're working on in terms of helping China, other countries. So please, your comments.
I tell you what, we're going to come back. We'll take a quick break and come back. This is a very important topic, and we'll be right back. We're back. Just a few more minutes left with our guest in studio, Bob Danhauser, Tyler Creutzfeld. Go ahead, John.
Now I think it may be an okay time to ask my first question, since we're almost out of time.
Go for it.
All right. Well, here's the fear, right? I just watched The Big Short last night, and that movie is about the collapse of the housing market and this bubble that no one saw coming, and how it was so obvious. It was right there in front of everybody, but no, everyone kept investing because it was a sure thing. Well, my entire life, China has been that sure thing. It seems like it's always been a place where people could spend money, and it would only grow. It could not possibly go down. And, after watching that movie, I'm like, wow, is China just a big bubble that's about to burst? And I guess that's my question.
A provocative question. Nicely done. Every time we see a phenomena like a bubble developing or strength in a market that is difficult to explain, you can always find people who are saying, well, this time is different. There's been a secular shift in the forces that affect this market, and the old rules just don't apply. And if you look primarily at the Chinese real estate market, I can see why people are tempted to buy into that argument, because if you just look at the money that's flowing in and the productive uses that money is being put at and the less productive building that's going on in the Chinese market, it's difficult to explain why prices keep going up and up and up and up, but up they do. I think most observers would say that there are certainly risks to that market, and at some point it's going to have to correct. Whether it's a hard correction or a softer landing, I think really depends on the skill of the Chinese policymakers to bring it in. And we're already seeing evidence that they're trying to do the right things. They're reining in bank lending to real estate development. They are actually cracking down a bit on shadow banking channels to limit their ability to contribute to this. The Big Short is a great parallel to, I think, what we're seeing in China, in that you see investors who are sort of ignoring common sense and analysis and saying, I just want the returns. So in China, I can only get a very low percentage return from bank deposit products. What are my alternatives? I'm going to buy into these so-called wealth management products where I don't really understand what's underlying those. All I know is that they pay me a healthy premium. I actually think the risk for investors here in the U.S. is less that it blows up in China, although that certainly does have some consequence. But I think the banks in China are actually pretty well positioned to absorb a lot of losses that a hard landing might create. I think the bigger issue is that the system is continuing to prolong a cycle of unhealthy investment in China. So it's an endless cycle of money being funneled into projects that just don't make a lot of good economic sense. And at some point, that's going to hurt the Chinese and perhaps, by extension, other investors as well.
And when do you see that some point? I guess that's the big call, right?
It is the big call, and if I knew that precisely, I probably wouldn't be here. I'd be dialing in from my private island. Not that Missoula isn't a wonderful place to be, but the Virgin Islands do have something to recommend it. It's awfully tough to call.
10 years?
Smarter people than me have been making the call for a number of years now and have been wrong.
Really?
It just keeps going on and on.
So your call, more than 10 years, less than 10 years?
Less than 10 years. That's not a hard bogey. Probably less than 5 years.
Okay, let's get a call on real quick because these gentlemen have to go here pretty quickly. Marilyn, real quick, what's your question?
Hi. I heard that they are moving away from U.S.-based monetary system and they're fixed on gold. Have you heard anything about that?
Okay, thanks for the call.
I haven't heard about going back to a gold-based system. You hear it bandied about here in political circles. I think, by and large, that's a fairly fringe view. Fringe, I don't mean anything bad by it, but it's just not a system that's well adapted to the modern financial system. So I don't see the Chinese going that way. I don't see the Americans going that way.
Okay, real quickly, we've got time for one more call. So, Michael, you're up. Go ahead.
Hey, how are you doing, John, Peter?
Good. What's up, sir?
Hey, as far as Chinese concerned and what they're doing, my take has always been the British is control of the monetary system, and I don't know, when it comes right down to it, the bubble burst 2 years ago, and if there was tariffs on trade with China, we would be a lot better off. So my comment is tariffs on the Chinese product America doesn't want it. The world doesn't want it. Now it's just a matter of.
Okay. All right. Thanks for the
Yep.
call, Michael.
Michael, we got to run. I'm sorry. I wish we had time to explore that further, but unfortunately, our guest's time has come to a close. Go ahead, John.
I guess America doesn't want Chinese products. I'm shocked.
So
Not the story I get at Walmart lately.
anyway, yeah. So, gentlemen, Bob, thanks so much for bringing our guests in with us today. Gentlemen, thank you so much for your time.
Thank you.
Always a pleasure, and you guys are welcome back anytime. Dr. Kim, thank you for hosting all this. We appreciate it. We're going to take a quick commercial break and come right back with a half an hour of open phones. We'll be right back.